FXN Trading Group, welcome back guys to the Market Maker series, and in this video we're going to go ahead and talk about pairs to trade and risk management. So let's just go ahead and jump right into it. So I get asked this question a lot, and that is, what pairs should I trade? Okay, so here's what I'm going to tell you about that. The first thing is you want to make sure that you are selecting pairs that have high liquidity um, within them. So you need to have pairs that have volatility, basically. So you want pairs that move, right? Volatility is what's going to make you money. If you have a pair that's not moving, it's going to make it pretty difficult for you to make money. Okay, so these are just some of the pairs that I know that I found that have moved, that do move, and have very high liquidity. Okay, so Euro USD, Pound USD, USD JAPY, USD CAD, Euro Pound, AUD USD, Euro CAD, Pound AUD, and Pound JAPY. Now, these pairs also are important because they're typically the ones that have the lowest spread on any broker. Okay, so these are the most popular pairs, so they obviously have a lot of liquidity, but also are, since they are the most very popular pairs, they have very low spreads. So that's why I choose these, and I like to trade them. Okay. Next is you want to make sure that whatever pair you choose, that it has a high ADR. Okay, ADR stands for average daily range. Now, if you use TradingView as your charting platform, you'll notice that when you pull up a chart on the bottom right hand corner, you'll see this little details uh, icon, and this will go ahead and tell you what the daily range is for that pair, so you know how big or how small the daily range is for that pair that day. Okay, and it also tells you whether it's at the high of the daily range or at the low end, which could be very useful when you're looking for setups with the market maker method. And lastly, we want to make sure that you get pairs that are congruent to the session that you're trading. So what I mean by that is, if you are trading a London session, you want to be trading pairs that move during the London session. So that would mean you're trading Euro and Pound pairs. If you're trading the US session, then you obviously want to get pairs that are moving during that session, which is USD pairs and CAD pairs. So very important that when you are trading any specific session, that you pick the pairs that actually are moving within that session. Okay. Another question is that what's my personal preference? Everybody is going to have a personal preference on what pairs they like to trade. So if you've already been trading for a while, you should pretty much know like what pairs you like to trade, right? So everybody's going to have their own different preferences as far as what pairs they want to trade. I choose to trade basically the pairs that I listed here. Those are the ones that are on my watch list, and those are the ones that I only watch. Okay, so I don't like to have a lot of pairs because I can't keep up with too many pairs. Okay, and that's the next thing we're going to talk about actually, and that is how many pairs should you trade. Okay, so I would tell you to go ahead and start with one pair and get familiar with that one pair. Find out how it moves, study how it moves. Okay, once you are comfortable with that one pair, then you can go ahead and move to maybe 2 or 3 pairs as you get more comfortable and watching multiple charts. Now, one thing that I do want to make sure that you understand is that the more pairs that you watch, it could be it could make you vulnerable because you can't watch all the pairs at one time. Um, and so it could make it difficult for you to trade. So I would just start with one pair, get comfortable with it. Once you're comfortable with that pair, go ahead and add, 2 or 3 more. Okay. And as you get comfortable with these pairs and you familiarize yourself with them, you can, add on more pairs. Now, trading fewer pairs, like I said, is always a great idea, even for profitable traders. Um, Watching too many pairs can lead to missed setups and sloppy entries. Like I said, you can't watch all the pairs at once, right? So pick some of the best pairs that have the best setups. If it doesn't have a good setup, don't look at that pair anymore. Focus on the pairs that have the best setup. Okay? Don't worry about missing a move. Don't get emotional about missing a move, because at the end of the day, you're going to find moves that happen all the time. So don't get stressed out or emotional about missing a setup. So if you stick to, from 1 to 3 pairs that you're comfortable with, you can watch 3 pairs and see which one of those 3 have the best setup. Okay. As you're watching these pairs, you might notice that, a setup is possibly just not there. And that's fine. You can move on to another pair. There's no reason to stress out over that. Okay. All right. So here is a pre-trade routine that I would suggest that you do. Okay. So the first thing is you want to check for any upcoming events that could impact any specific pairs. So you want to check the news, basically news events that are being released for that day. That way you're aware of what pairs could be impacted by that news event. Okay. Secondly, you want to determine the bias for the pairs on your watch list. So this goes into going into the 1 hour chart and trying to identify where you are in the cycle, so that way you can have a directional bias on those pairs. And then you want to focus only on the pairs that have the best setups. Like I said, guys, not all the pairs are going to develop setups during that session. So don't stress about it. Just go through all the pairs systematically, the ones that you like, and select the ones. Focus, only focus on the ones that have the best setups. Okay, that way you can get the best possible entries on those, and you're not watching a pair that doesn't have a setup and you miss an actual good entry on a pair that was having a good setup. Okay, now let's talk about news events. So if you go to forexfactory.com, and that's also we have a link for that on our website. So it's right on the home page. So this is what it looks like. Okay. And this basically breaks down for you the news events that are upcoming for the day of the week, the month. And it pretty much breaks down everything for you. So the only thing that you want to pay attention to are any of the orange or red folders. Okay. Those are going to be the high impact news that you want to pay attention to. You will see pairs that have yellow folders, and you will see some that have like a gray folder. So meaning like these little colors here. The ones that have gray folders, that basically means that that particular pair or those banks are going to be closed for the day. The yellow folders that you would see around this area here, those are very low impact news, and those won't affect volatility in that pair. Okay, the ones that will affect volatility in the pair are going to be these orange and red folders. So you just want to make yourself aware of that you don't want to get yourself into a trade and have directional bias and everything like that going, and then you don't check the news, and then news goes against you and kind of messes up your whole setup. So that's one thing that you definitely do want to make sure that you're aware of. Also be aware of that market makers do use the news to influence, okay, where they want the markets to be. So just keep that in mind, that they will use the news to do that. Okay. Now, what lot sizes should you be using to trade? That's another popular question that I get. And this is going to come down to starting to do risk management. Okay. And I think one of the most important things in trading is going to be risk management, because at the end of the day, the only way that you can trade is if you have money in your account. And if you do not use great risk management, you're not going to have any money in that account to trade. And if you cannot trade, you cannot make money. Okay. So very important that you understand risk management is everything. All right. So what is the correct lot size that you should be using? Okay. This is a question that every day comes up, and to answer that question, it depends on the account size that you have. Everybody has a different account size, so of course everybody's going to have a different lot size that they use. Okay, I'm gonna give you the basic lot size calculations that you should be using. Okay, so you should not be trading a standard lot size until you have $10,000. Let me repeat that again. You should not be trading a standard lot size, a 1.00. You should not be trading that unless you have $10,000 in your account. Okay. Now, I'm going to use this as an example. If you have, let's say, $100 on your account, okay, I'm going to tell you that the lot size that you should be doing is a micro lot of 0.01. Okay. If you have $200 on your account, then you can move up to a micro size of 0.02. If you have 300, 0.03, 400, 0.04, and so forth and so on. When you get to $1,000, then you can trade a mini lot, and that is a 0.10. Okay. And then pretty much starts over. So when you have 2,000, you can go up to 0.20, 3,000, 0.30, 4,000, 0.40, and so forth and so on. When you get to 10,000, then you can go to a standard lot, which is a 1.0. Okay. That is going to keep your account alive and going for a very long time if you use those calculations. Okay. Because if you're going to do this correctly, and you're going to do this consistently and for a long time, for many years to come, you need to make sure that you are managing your risk extremely well when it comes to trading Forex. Okay. So if you use those calculations, that will give you a very, very safe risk management plan, to where you're not over leveraging your account. I cannot tell you how many times I have seen people with $200 or $300 trading a standard lot, and literally as soon as the market goes against them, 5 pips, 10 pips, they are in margin call and they blow the account. Okay, so keep that in mind. If you want to last in this game, in this Forex market, you need to make sure that you are protecting your capital, because if you don't have any capital, you're not going to be able to trade. Okay. Another thing is the percentage of the account that you should be risking per trade. Everybody has, different percentage that they want to risk per trade. I'm going to tell you that there is no way that you should be risking more than 3% per trade. Okay? No more than 3% per trade. You should not be risking more than 3% per trade. All right? If you want to risk less than that, great. But I would not risk any more than 3% of your account per trade. It's not worth it. And lastly, you can use what's called a position size calculator. Okay, and it looks like this. You pretty much tell it, you put in the information of USD as your currency, your account balance, your risk percentage that you want to have, which is 3%, and then what your pips, what your stop loss in pips. So if you want to have a 10 pip stop loss, then it's going to say, okay, for 3% on $100, you can use up to a mini lot, standard lots of 0.03. Okay, is what you can use. So depending on this number here, if you keep the risk percentage the same at 3%, and then you just put in different as far as pips go, this is going to change what lot size you're going to use. But again, just to keep it very simple and simplistic for everybody, if you have $100 account and you're risking, let's say 3%, it doesn't matter what stop loss you're going to use, because you're just going to trade a 0.01, which is a micro lot. Okay, and if you lose 10 pips, trust me, it's not going to break the bank. Okay, and that's the whole point, is that you're not going to break the bank and you're not going to be stressed out because you lost half your account on one trade. Okay, until you get consistently profitable, over and over and over again, until you get to the point where you're winning 8-9 out of 10 trades, then you can go ahead and maybe go up to a 0.03 on $100, because you know what you're doing, and your emotions aren't getting involved into a trade, because you have confidence in yourself, in what you're doing and what you're seeing. So this is very important, that it just takes the stress away when you only have $100 in your account. It takes a lot of stress away when you're only doing 0.01 trades, because number one, you're just learning to be consistent. Once you're consistent, then you can up the lot size. Okay, because if you're not consistent, you're going to blow the money anyways. So would you rather blow it faster or slower? And then learn from the mistakes if you're doing it slower. So very important. If you just Google position size calculator, this is just one of them, and this one is actually on babypips.com. I'm going to try to get one of these calculators actually on our website, so that way you don't have to go and search for it. So I'll be trying to work on this to get this working on our website. All right, guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.